Hello, guys. We are doing a little update here midweek about the state of Ethereum. And right now, things are looking good if you have been bullish and staying patient. Following the dip from last week, we are back above 3,500 now. And we want to go over some on-chain metrics and some interesting data overall that might be indicating where the markets will be heading next and what could be happening now that we are back above 3,500 for the first time since last week. So what we're looking at right now is the overall address activity of Ethereum. And this, of course, simply measures the amount of unique addresses on a day-to-day basis, in this case, actually a 2-hour interval, for the total amount on the Ethereum network at any given moment. So Dino, what we're looking at now is pretty much our biggest spike since early July, if we're looking at this on a macro level.
Yeah, so there's a few things to be said about this spike in daily active addresses. For those unfamiliar with the metric, generally what this means is simply we're looking at the amount of unique addresses that are sending or receiving Ethereum on a daily basis, right? So obviously, for whatever reason, for the first time in a couple of months now, even throughout this rally, we haven't seen this type of network level activity for Ethereum. And now all of a sudden, for whatever reason, we're seeing it spike once again. Actually, in the last 5 days, there's been a 31% spike in the or uptick in the amount of unique addresses interacting with Ethereum. I think part of the reason why we're all of a sudden or sort of finally starting to see a recovery in the network level of activity for Ethereum is visualized well on another chart, Brian, and this is the amount of the average fees for interacting with the Ethereum network, which over the last couple of days, even though they still remain relatively high, have been steadily declining. So let's look at the fees, and then we can plot against it the price of Ethereum as well as the address activity on Ethereum. And you'll see there's a pretty clear divergence happening at the moment between the fees on Ethereum and daily active addresses. So as Brian is showing right here, the average fees for interacting with the Ethereum network have peaked at about 40, I believe it was about 50, $57 here on September 8th. Since then, however, the average fee or premium to interact with the Ethereum network has dropped fairly significantly, currently sitting at around $16. Obviously, this is still extravagantly high when you compare it to the entire history of the Ethereum network, but it at least means that the premium for interacting with the Ethereum network is moving in the sort of downward direction. And this is not the first time that we have seen this sort of a divergence between the fees on the Ethereum network and the address activity. If you look at a few maybe weeks to a month before, so right around the I think it was August 20th, if I'm not mistaken. So this is the right there. So this is the second time that we've seen this very same phenomenon. So right around between sort of August 13th and August 23rd, there was a pretty clear decline in the average fees for interacting with the Ethereum network, going from $21 all the way down to around $11. And in that time, there has been a sort of counterweight in terms of the amount of addresses interacting with these. And then once again, we saw these massive spikes in fees, which were obviously part DeFi, part NFT, actually a large part NFT related. Since then, however, the last couple of days, finally we're seeing fees drop and we're seeing active addresses rise. Now, why is this an important factor? Well, generally speaking, a lot of on-chain analysts use daily active addresses as sort of a proxy for token-related demand, right? The more addresses interact with the token on a daily basis, the more network effect there is, and also the more value is being created on the network on a daily basis as well. At least that's the presumption. And if you look at the active addresses for Ethereum between October of last year and May, right, it has been a steady increase overall. So this is what we often see with sustainable price rallies, is that sustainable price rallies often sort of go hand in hand with sustainable increases in network level activity. So the last time that we were at about 4K level, which was back in May, right, we were at about between 700 and 800,000 daily active addresses, right? So we were throughout this last part of the rally for Ethereum before the correction on September 8th, we were nowhere near those levels. I think we peaked at about 450 to 500,000 daily active addresses, right? Which is still incredible, you know, in a vacuum. But overall, it's much less, or the network activity was much lower than what it was back in May. So now we're seeing it recover, which I think, obviously, it's early. Uh, Once again, we could see another NFT project start promoting itself well, and all of a sudden, and if the fees start going through the roof again. But for the time being, I think this is a positive development and a chart that I would keep an eye on, Brian. So one other thing that we might want to look into is network growth for Ethereum, and we can do that on a bit more of a macro level. Maybe look at the 7-day moving average for network growth for Ethereum over the last year. So network growth is a metric that also tracks network level activity for ETH. However, what this chart tracks is only the amount of unique addresses that are interacting with Ethereum, sorry, the amount of new addresses that are interacting with Ethereum on a daily basis. And as you can see, network growth has pretty much bottomed out around the price bottom for Ethereum back in July. Since then, even though it's obviously nowhere near the same sort of strength that we have seen throughout the first leg of the 2020 rally, the trend is in the positive direction, or we're sort of seeing the upward momentum once again in terms of new addresses that are interacting with ETH as a token. We're currently hovering at around 100,000. Ideally, we would like to see this, rise to about 120 to 150,000 once again, sustainably over time. But the trend overall, I think, is once again a positive development. So over the last 3 months, we are seeing a continuous rise in the amount of new addresses interacting with Ethereum, and more closely, or over the last couple of days, we have finally seen the overall activity on the network explode once again. So it's still too early to say or to sort of make any price-based predictions using this data. But I think on a longer time scale, if these two metrics continue to move in the upward direction, it should be good for Ethereum bulls, Brian.
Yeah, as we've noted in the past, crypto markets are very cyclical, and we have seen before, going back to last year, September 2020, we had a similar phenomenon where network growth slowly started to build up, going from, around that 70,000 mark all the way up to, spiking here at 124, taking a little bit of a drop off, bigger spike all the way up to 150, taking a drop off, and so on and so forth, as it gradually climbed all the way up to these big spikes of 230, 230-ish on both phases right here near the all-time high. And we're starting to climb again. This is an encouraging amount of new addresses being created on the ETH network. And we're going to have to watch and see how it plays out. Of course, there's still going to be some waves dependent on how stable Bitcoin is itself, which we'll analyze on Friday, not here today on the video. But overall, it is good to see when new addresses are beginning to rise, whether it's because of the price rise, more people are becoming interested, or whatever else. It's generally always going to be a good thing when new addresses are being created.
So one thing that we should also mention here when talking about address activity on Ethereum is one specific group of addresses that we also like to keep an eye on are active deposits. So deposit addresses are essentially addresses that are being used to funnel Ethereum to known centralized exchanges, right? So the idea is when you see spikes or rises in daily active deposits, that means that sustainably or relatively high number of addresses are moving their Ethereum to exchanges, presumably to sell. So rising daily deposits would indicate potentially rising sell side pressure. What we're seeing actually throughout the last basically 10 days, since the correction, we are seeing a drop of about 37% in daily deposits for Ethereum on a daily basis, right? So even though the price of Ethereum is starting to recover, the amount of addresses interacting with Ethereum in terms of sending Ethereum to centralized exchanges is dropping. So we're not seeing a rise just yet in potential sell-side pressure, which in a short-term setting, I think could also help Ethereum sort of try to retest the 4K level. Obviously, this is something that could change on a very short whim. So I would suggest keeping an eye on this chart over the next couple of days, especially if Ethereum keeps pumping. But it's another sort of segment of address activity that I think warrants a little bit of discussion, Brian.
Yeah, one thing, and we didn't discuss this before starting the recording, but one thing I always like to look at when comparing active deposits versus price is how it looks versus the overall address activity. And I'm just going to do a quick test right now to see exactly what the ratio looks like. And all I have to do for that is combine the two here, hit combine. I'm taking address activity divided by active deposits. I'm just going to put a division sign there, and we'll call it DAA, daily active addresses, divided by DAD, daily active deposits. Hit combine. We will put it on the same chart here. I'll take off active deposits and ignore this very final line because this is the current day, so the ratio is going to look off. But overall, we had a growth, just as I suspected, going from May to July as the price was dropping. And look at that, as soon as prices started rising, the ratio actually went down, which would be a good thing. That means there is less deposits per overall address activity happening. And even though that's not always the case, we can see clearly here on the bull run, the ratio is getting higher and higher. This is more of a relative ratio where you want to look at how it's sitting compared to very recent times. So if I were to look at the last 5 years, it's going to look all over the place. But generally speaking, as you start to get higher and higher, it's going to become more and more top-ish. And even though very recently, over the last, what I guess I'll say 5 days or so, things are beginning to rise again, it's not significant enough yet to look bubbly like it was about a month or 2-3 weeks before that all-time high back in May.
Mm-hmm. Yeah. This is a new feature that we've added to the website where you can combine different metrics to sort of get additional context into the behavior of particular coins by basically using several metrics and then ratioing them between each other. So moving on from sort of network level activity, I think, Brian, another sort of important indicator to look into would be the MVRV for Ethereum, because I think as we see Ethereum start to recover, we are going to see Ethereum's MVRV ratio start to move back up, and that could be a potentially dangerous signal. So it's important to keep an eye on where MVRV ratios are. Now, for people that are unfamiliar with what MVRV ratio is, let me just give a brief introduction. MVRV ratio is an on-chain metric that, making a few assumptions, tries to visualize the average profit or the average loss of all addresses that have acquired Ethereum or any coin in a specific time frame. So the 30-day MVRV ratio that we're looking at right now tries to visualize the average profit of all addresses that have acquired Ethereum in the previous 30 days. Currently, that's plus 3.5%. So essentially, the average profit of short-term Ethereum holders is plus 3.5%. So how do people use this metric? Well, what on-chain analysts do is they look for historical trends, right? The higher the idea is, or the premise is, that the higher the MVRV ratio is, the more likely, first of all, the higher the unrealized profits, and therefore the more likely it is that holders are going to start claiming those profits and applying sell-side pressure. So the higher the MVRV ratio, the more risky it would be, based on this metric at least, to enter into a trade. And then the lower the MVRV ratio is, the more opportune time it could be to accumulate this coin based on MVRV alone. So like I said, what on-chain analysts do is they look for historical trends. What were the sort of peaks and valleys for MVRV ratio, so that we can see, historically speaking, when short-term holders like to sell off their bags at, like, what are sort of the margin levels or profit margins at which they have shown or exhibited the tendency to sell their bags in the past. And for Ethereum, Brian, I think what we're looking here is the last year. We can maybe look at the last 3 years just to give people an idea. What are the sort of the established tops? Because currently we're interested in tops in particular for Ethereum's 30-day MVRV. So I would say that it seems like anything above 20%, plus 20%, seems to be a level at which the 30-day MVRV ratio starts becoming a little bit unstable, more volatile, and generally points to a risk of short-term correction, right? So historically speaking, levels of plus 20% and above seem to last only for a couple of days at most, and then lead to or sort of coincide with short-term price normalization. So if we assume that around plus 20% is when short-term Ethereum holders like to take their profits, the current level is still ways away, right? So we're currently at plus 3.5%, meaning that short-term Ethereum holders don't really have a whole lot of incentive, on average, obviously, to sell at these levels. And it seems like historically they were more than okay to wait until their bags, start gaining more before starting to liquidate some of their assets and reduce their exposure. So from that perspective, even though we're not super low in terms of Ethereum's MVRV ratio, so the lower we are, the sort of better it could be to accumulate, we're sort of in a neutral territory right now. Relatively speaking, or historically speaking, there is more room to the upside for Ethereum before its short-term holders start exhibiting, sell-side behavior based on historical trends. So this is the 30-day ratio. And Brian, maybe you can also show the long-term or the 365-day MVRV ratio and tell us what the long-term holders are looking like right now in terms of their profits.
Yeah, so removing the 30-day here really quick, we can see the last 3 years of the 365-day MVRV ratio indicates we're still well into the positive. We aren't near where we were near the all-time high, where the average 365-day trader was actually up 150% before plummeting all the way down, barely going into the negative on July 20th here. And now with this bounce and, partial close to full recovery at one point, but at least 3/4 of the way back to that all-time high, at least from this chart ratio, not in true numbers. We're looking at about 61%, give or take, for the 365-day ratio, which is not a danger zone by any means, but it looks a little more worrisome than the 30-day in the perspective that it's closer to the very top of what's considered to be the time of corrections.
Yeah, so plus 60% is, relatively high. There's no sugarcoating it. If you look at 2019, 2018, most of those 2 years have been spent below these levels. However, if we're zooming in on the last year of data, specifically the 2021 bull cycle, it's relatively clear that we are still ways away from bull cycle highs. So at about plus 60%, we have seen Ethereum holders, long-term Ethereum holders, hold well above, once their profit margins move above plus 100% and more before they start selling en masse. So at this moment in time, the long-term MVRV ratio is certainly more concerning than the short-term MVRV ratio, but even it at these levels could provide a bit more room to the upside before we can label it completely overvalued. Still, certainly among the metrics that we're looking at on a daily basis, certainly a bit more concerning signal for Ethereum, and a signal that there might be more profit taking to be had by Ethereum stakeholders before we see a full-blown recovery, right? So, okay, one last thing that we want to, Brian, sort of showcase here before we end is a look at Ethereum social data, right? So there's been a few interesting developments in Ethereum's social metrics, which we are looking at right now. So the two that Brian is showing is social volume and social dominance. So let's briefly explain what those are. At Santiment, we track over 1,500 crypto social media channels. And then On a daily basis, we collect more than 100,000 new text messages from these channels. And for each coin on our platform, we have developed social metrics which allow you to look at the amount of mentions of that coin on crypto-related social media channels, and compare it to the price of that coin or other metrics of the coin in question. So social volume essentially just shows the amount of mentions of Ethereum on crypto-related social media over time. And we're seeing a pretty significant or sort of consistent drop-off in the amount of ETH mentions since the the retesting of 4K of the 4K level, right? Over the last couple of weeks, the amount of the daily chatter towards Ethereum has clearly started to dissipate, right? And so social dominance, on the other hand, is kind of the same metric, but looked at it from a different angle. So what social dominance does is it compares the social volume of Ethereum to the social volumes of other top 100 coins. And I think, Brian, also that social dominance has been dropping quite steadily. So it was at around plus 18% there at the start of the month. And then now we're down to around 10%. And over the weekend, I think we were even lower at maybe 8% or 9%. So generally speaking, it seems like, Brian, the crowd is relatively moving away from Ethereum. I think they're still sort of talking about other coins that have been performing well, other alts. And Ethereum is sort of currently flying under the radar a little bit. Would you say that's correct?
Yeah, absolutely. I mean, there have been a few factors as to why the dominance has fluctuated and kind of swung down despite Ethereum's, consistent trend up, even with this volatility here. So much attention has been put on, projects that have been on huge pumps. Solana obviously comes to mind. Major FUD happened just yesterday. We won't get into, the details of some of the other projects, but Solana, Avalanche, Phantom, several projects out there have kind of taken the lion's share because people are craving volatility, especially when Bitcoin is declining or staying flat. Ethereum can kind of be a nice alternative for Bitcoin, and I can probably predict that it'll probably continue to rise a little bit by the end of the day, especially as the US heads into the afternoon here as of the time of this recording. But Ethereum is not as volatile as some of the other altcoins, and with a flat or mildly declining market like we've at least seen for the last week, people often jump to the coins that have the most action. Even if that action is down, it tends to take up the lion's share until Ethereum really shows a state of growth, kind of like it saw a few weeks before its all-time high, where it was really surging compared to the rest of the markets. That's when you'll see these big dominant spikes, and the big dominant spikes will very often lead to local tops.
Yeah, which we saw at the start of the month, right?
Exactly. And we saw this big spike here where it was going not double-digit percentages above everything else, but it was at least a notable rise above Bitcoin and even above some of the other altcoins that had been talked about during the turn of the month. And that's why we had this little mini spike here, followed by the decline as other altcoins like Solana started to take a greater hold of the interest of traders.
Yeah. So in general, as a rule of thumb at Santiment, what we've found over the years is that elevated social metrics like social volume and social dominance usually aren't friends to cryptocurrencies. In fact, what they usually point to, especially when they occur during like price rallies and pumps, what they point to is the crowd becoming irrationally confident. We're seeing a lot of greed in the market, and it's essentially a signal of markets overvaluing an asset. And as a result, there's an increased risk that we may see a short-term correction. And in fact, even though it might sound a little bit contradictory or counterintuitive, low social volume, low social dominance is usually what we like to see in assets, because it means that at least at this moment in time, the coin is not being overhyped, and it would allow the price of that coin that asset to appreciate a bit more before the market catches up and we see retail sort of starting to rage against it about it once again. And then maybe the last point to bring up would be social sentiment for Ethereum, Brian, right?
Yeah, should we go to the graphs page for this one?
Sure. Yeah, let's go to the graphs page. So last metric that we want to bring up here is another one of our social metrics, which is social sentiment in particular. So what we were seeing a minute ago in social volume is simply the amount of mentions of Ethereum, right? But we don't know if those mentions are positive or negative or ambivalent. So we've also developed a machine learning algorithm that parses all of these messages for Ethereum or other coins, and then labels them as either positive or negative or neutral. And the end result is a metric that you're about to see, which we call weighted social sentiment, which essentially what it does is it tries to visualize the average mood of the crowd towards a particular coin, right? So similar to social volume and social dominance, the higher the social sentiment, the more bullish, in other words, the mood of the crowd is toward a coin, the more worrisome it can be for the coin's short-term price action. And then the lower it is, the more sort of uncertain and anxious the crowd is about a coin. There's more like FUD related discussions. And as a result, we're sort of in a position where the market can appreciate in value and that asset can appreciate in value before we see the retail hype train catch up with it. So over the past basically a month or so, the average sentiment towards Ethereum has been slowly sort of moving to a predominantly bearish atmosphere. And in general, I don't think that's necessarily a bad sign. I think, well, first of all, I could see a few reasons why that is. Number one, the fees being absolutely ridiculous. Number two, Solana's massive uptick, although I will be very interested to see what happens with these metrics for Ethereum now that Solana is kind of in hot water. But overall, there have been several sort of, you could say, bearish narratives for Ethereum, even despite its recent price action. So it's not a surprise to me to see that on average, crowd mentions towards Ethereum have been mostly sort of declining in emotions, right? In positive emotions. So now we're in a predominantly bearish sentiment towards Ethereum. So overall, what we're seeing is lower social volume, declining social dominance, and predominantly bearish sentiment. Although these could still go lower, and we're nowhere near sort of historical lows for social sentiment, we're sort of still in a sort of neutral to slightly bearish territory. I think all of these are relatively optimistic signals or markers that we are moving in the right direction in terms of the crowd not really overvaluing Ethereum for the moment, sort of, in fact, doing quite the opposite, which could allow its price to appreciate more before, once again, the sort of market greed catches up with it.
I would agree. Yeah, I see, even back when we were very close to hitting 4,000 again, just about, 10 days ago, people were kind of in disbelief. There was a lack of kind of, I guess, belief that there would be a return to the all-time high levels. A lot of people felt it would come up short, and they were actually correct. But after the decline, people just said, see, I told you so. And they got even more negative, and now we're starting to bounce again. It doesn't mean the bounce will continue by any means. But overall, as Dino's mentioning, with a decline in dominance combined with a bearish overall sentiment toward Ethereum, that's generally going to lead to price rises historically until people do get more bullish. And that's when things start to change and, people can actually get faked out. Like there was a ton of FOMO back here just prior to the all-time high. And there are exceptions, of course. This was a big one where it still continued to rise before a decline. This one kind of didn't really be impacted too much, and it eventually rose anyways. But generally speaking, low is good. It indicates bottoms, especially when they're extended negative sentiment stretches like this one. Those are the ones to really look out for. And this is a nice metric to look at in tandem with volume and dominance.
Yeah, for sure. So that's sort of a, quick update for Ethereum for today. I think overall, I wouldn't say there are massive green flags for Ethereum at the moment from an on-chain or social perspective, but we are seeing some cautiously optimistic signs. So sort of to put it in a few words, I think the fact that we are seeing daily active addresses start to rebound, we are seeing network growth or the amount of new addresses interacting with Ethereum keep growing over the last couple of months. And then on the other hand, the fact that we are clearly seeing the crowd not being all that hyped or interested in Ethereum for the time being. Those things combined put a sort of present a fertile ground for Ethereum to recover. Now, obviously, this doesn't mean that it will. There are a few relatively concerning signals, like the fact that its long-term MVRV ratio is still pretty high, suggesting that there could be further sell-side pressure. But from a sort of midterm, sort of value investing perspective, it's good to see finally Ethereum's on-chain activity really pick up once again. The hope for me, at least, is that we're not going to see large issues with fees or sort of large spikes in fees over the next couple of weeks, so that we can see really Ethereum's daily active addresses and network level activity blossom once again. I personally think that Ethereum's network activity has been dramatically artificially deflated since the start of the month because of these rising fees, because the massive fees have sort of priced out a lot of low ROI transactions. So finally, now we're seeing a lot more sort of daily, day-to-day sort of transfers and day-to-day activity on the network, because it's just cheaper to do so, and that sort of contributes to more value being created on the network. So that's a positive signal. And for me, I would keep an eye on these metrics in the next couple of days and couple of weeks to kind of get a sense of where Ethereum might be headed next. So yeah, that's it for me. Brian, anything to add before we end it?
Nothing else to add. I really encourage you guys, if you don't have a Sandbase Pro account yet, go ahead and head over to santiment.net or santiment.net/pricing, app.santiment.net/pricing. Check out our offers. We have some amazing metrics here. All of the things we have shown here today on this video are available for our pro users. Simply sign up there, and you can even enjoy a nice 2-week trial. So for now, on behalf of Dino, I wish you all a safe rest of the week, and thank you for watching. Make sure to spread the word.
Thanks, guys.